Good morning. So today is Monday, December the 14th, and it's the last full work week for many of us. And so I wanted to drop in and talk about tax planning and to talk about the status of the Paycheck Protection Program, loan forgiveness. And instead of cranking out a long email that might be difficult to get through, I figured I would record this video. As you can see, I am in my home office and I am recording this on my iPhone. So if you're looking for high production quality, you're going to be very disappointed. But if you are looking for sound tax advice, I hope you won't be disappointed. So let's get started. I do not predict a tax increase in 2021. There are a number of reasons for that. One, I think that we're still awaiting the outcome of the two Georgia Senate races. The Republicans have to win one of those in order to maintain control of the Senate. And if the Republicans maintain control of the Senate, I think that we are safe from tax increases, at least until the midterm elections of 2022. Moreover, even if we, or I guess I should say, if the Democrats seize control of the Senate and thus control both chambers of Congress and the White House, I think it would be very difficult politically to pass a tax increase during a pandemic. And so even if both of the Georgia elections swing to the Democrats, I really don't expect a tax increase for 2021. So what does that mean for our tax planning here in 2020? I think what it means is that it's still appropriate to the extent that you can, accelerate business expenses into 2020, certainly make that last charitable contribution before the end of the year, maybe even make an extra mortgage payment to push more mortgage interest into this year. And then also, if you can defer business income into 2021, then I think the tax rates are going to be fairly similar next year, but you won't owe the tax until later. So those are my thoughts. I could be wrong, but I feel pretty good about that advice. If you're curious as to what those accelerated business expenses or personal deductions will save you in tax, I encourage you to look at last year's income tax return. Really, within the first few pages of that tax file, there is a tax return summary for 2019. And in that summary, there's a marginal tax rate. And if your income and deductions have not changed much since 2019, then your marginal tax rate is probably the same. What is the marginal tax rate? The marginal tax rate is the rate or the highest rate at which you paid tax in 2019. And that's what governs when we're talking about extra expenses or deductions. And so if last year you were in the, let's say, 35% tax bracket, then you can expect that any extra expenses or deductions that you're able to generate between now and the end of the year, they're going to save you 35% in federal tax. And then also you add the state tax component to that as well. So hopefully that is helpful in helping you determine the value of these expenses and deductions between now and the end of the year. SGO contributions. SGO stands for Scholarship Granting Organizations. And you may remember that a couple of years ago here in Alabama, these scholarship granting organizations were I guess, brought or were originated. And what you were able to do is you were able to make a contribution to a scholarship granting organization that had the effect of paying state income tax. So if you made a $5,000 contribution to an SGO, it was like you made a $5,000 tax payment to the state of Alabama. And on the federal return, you got a federal income tax deduction as a charitable contribution. And so that was a nice benefit for individual taxpayers to take advantage of. About a year or so into that, the IRS said, no, we're not going to let you do that. We're not going to let you get a state tax credit and a federal tax deduction for the same dollars. And so the IRS said, to the extent that you get a state tax credit, you have to reduce the deduction on your federal return. Now, for some reason, they created a loophole and they blessed it, saying that you could get that federal deduction and state tax credit if these SGO contributions were made through a business. And so between now and year end, be thinking about that. If you would rather make a contribution to a scholarship granting organization, which funds different schools throughout Alabama and is also available in other states, then you can do that and you can get the state tax credit and the federal deduction, but it has to be run through the business. And so if you want more information on that, go to your scholarship granting organization website. They generally have great instructions on the step-by-step process by which you can make this happen. The last thing that I wanted to talk about is the status of the Paycheck Protection Program loan forgiveness. That loan forgiveness, or at least the way it stands right now, the loan forgiveness is not taxable. And that has always been the case. But the IRS stepped in mid-year and said, well, that is true, but business expenses paid with tax-exempt money are not deductible. And so all of the wages and the rents and the utilities that were qualifying expenses for PPP loan forgiveness are not deductible if the loan is forgiven. And so the IRS has said if you have a reasonable expectation that your loan will be forgiven, even if it has not been forgiven by year end, then those expenses are not deductible. Now, I've been expecting, and I still expect Congress to close this bad outcome by passing legislation in whatever stimulus package they agree to that says that the expenses are deductible. But right now, those expenses are not deductible. I've been encouraging my clients to hold off on requesting loan forgiveness until after this issue is resolved. However, I do know that some lenders are encouraging and sometimes encouraging strongly business owners to go ahead and apply for forgiveness, which I understand that because they don't want to be overrun with applications at the last minute. And so I'm going to fall in line with that, even though we don't know what the tax outcome of that is going to be yet. If your lender is encouraging you strongly to submit a forgiveness application now or within the upcoming weeks, then feel free to do so. And if you need our assistance in completing the application or reviewing what you've done, just let me know. Now, our time gets pretty limited, as you might imagine, once we get towards the latter part of January because of filing season and everything that comes with that. And so if you would like for me or us in the firm to assist you with completing an application, let's go ahead and jump on that in early January and see if we can't get it completed and submitted by then. And as always, if you have any questions about this or anything else that has come across your radar from a tax planning standpoint or just from just regular business financial matters, please feel free to call or email me. I will be mostly in the office except for the holidays that our firm recognizes. I don't have any long vacation plans, and so please feel free to reach out. And if I don't talk to you beforehand, I hope that all of you have a happy holidays.